Chander Agarwal, Managing Director of TCI Express, joining in on the show right now to talk more about their business and how the quarter went by was. Chander, hi, good to have you on ET now. Your volumes have remained flat this quarter. Tell me, where is the demand lagging?
So overall, in the high value segment in the Indian economy, we've not really seen the way it has picked up. It should have picked up this year. And it's through all our verticals, be it textiles, be it electronics, be it, engineering. Everything is not really taken off as, compared to what we had uh, uh, envisioned in the beginning of the year. Of course, we had the COVID like disruption, which the companies are still feeling the manufacturing companies are still feeling the brunt. They're still bearing the brunt, and it'll take probably another like maybe this year for it to kind of like even out, and from next year onwards, we should be back on track.
FY24 Capex guidance was cut earlier by 50% and then lowered to 40 odd crore rupees as well. Tell me, what are the capital allocation plans as you move forward?
So we have the Pune sorting center. The automation of that will be completed by this financial year end, by March. And next, we would be looking at automation of the other sorting center, most likely in Ahmedabad. And in general, the land acquisition takes time, and the what we had planned for buying the sorting centers uh, took a slow process. There was a whole slow process. I think maybe because of the upcoming election year. So last year we were not able to really fulfill all our capex requirements.
Okay, fair enough. Now, the company also added 50 new branches versus the expectation of 70 to 75 in 9 months ended FY24. So, what's the reason for this drop, and will you be scaling up?
So it depends totally a lot on the demand and the demand and supply. We will not open an office where we know that it's not going to add any sort of value, and that it'll be sitting without business. So we have to continuously gauge what's on the anvil, what's going on, and we have engaged a consulting company to help us achieve that. So, I mean, with that reinforced planning, we're quite confident that going forward we will achieve all our targets.
Right. And the automation for the Pune sorting center, that's expected to be completed by March. Are you sticking to your timeline? And what is the timeline to automate the other centers, Mumbai, Ahmedabad, etc.?
So, Pune is on track, and the next one will be Ahmedabad, which we would like to possibly complete by September of next year.
You have a target as well for your margins for FY25. Can you guide us through what exactly you've pegged?
So here, we are looking at maintaining the margins in compared to, how the other companies have performed. In our case, we have not let the margins drop or, taken a hit in any way. And I think it's just that it's a cycle where the business, slows down for some time, and then yet when that happens, companies lose money. But here we were able to maintain our profits, and yeah.
Good to have you on board, not revising the margin guidance. That's a view coming in, and the high value segments as of now have not really picked up. But the Pune sorting center will be completed by March. That's the view coming in from the management of TCI Express.